Let's talk to Robert Omotunde, who is an investment analyst with AfriInvest, to get his outlook for the markets for this week, for the fixed income segment of the market, that is. So good morning to you, Robert. Thank you so much for joining me on the program.
Thank you, Balaji. Thanks for having me.
Well, taking a look at where the markets finished off last week, we had 16 bonds. Well, we seem to have lost connection with Robert, but as soon as we can reconnect, we're taking a look at the fixed income segment of the market. We'll be talking about federal government bonds as well as Nigeria Treasury bills. We saw 16 federal government bonds listed last week, but only 7 were traded. And of course, I read that out to you. But just to quickly refresh your memory so that when we do get Robert back online, we'll be talking about that segment of the market. So the February 2020 bond was the most actively traded last week. We had about 37 deals done for that particular bond with a price high of 113 naira 50 kobo, and was valued at 4.20 billion naira at the end of the day's trade. Now we're getting the July 2034 and the January 2026, as well as the June 2019, are also some of the bonds we tracked on the program earlier on. So Rotimi, I beg your pardon, Robert is back to me now. Robert, thank you so much, and apologies for the technical hitch, but let's quickly talk about the markets, your expectations for this week. As I already mentioned, we saw 16 federal government bonds listed last week, but only 7 were traded. What's your expectation for this week? Are you expecting to see more profit taking to continue on that segment of the market?
Well, for the bond market last week, what we saw was more of a major rally, if you like a slight rally in some benchmark instruments. Like you rightly pointed out, although there are 16 FGN instruments listed in the bond market, but most of the activity we see in the market is usually around the benchmark bonds. So as you noted, about 7 bonds are currently tracked as the benchmark bonds, and those are the bonds that investors usually trade actively. For January 2026 instrument, which was a new instrument that was issued this year.
But let's quickly talk to Robert Omotunde, who we've got back with us. Robert, we've got roughly about 120 minutes or less to finish this conversation. But thank you so much for sticking around. So quickly run us through what to expect for the bonds market this week, and then talk to us about expectations for the Treasury bills segment as well.
Okay, the bond market has remained relatively stable as against what is happening at the other end, the equities market. What we expect for the week is for investors to continue to find those bonds that are currently trading at attractive pricing for them to take some strategic position. From our analysis of the yield curve, we can see that most of the instruments are kind of highly rightly priced, because if you look at the instrument, most instruments are currently either trading at par or slightly above par. But this still presents opportunity because for investors who want to take advantage of the different supply in the market.
So Robert, could you quickly talk to us about the Treasury bill space as well? Are they appropriately priced, like you put it, for the bonds? Like what you mentioned with regards to bonds market, are the Treasury bills appropriately priced as well? And how will that affect trade for this week?
Yeah, for the Treasury bills market is the short-term funding that technically affects the dynamics of the Treasury bills market. So there are still opportunities, like if you analyze from the Treasury bills perspective, from the shorter term to the longer term. On the average, we see yields trade at about 6.4%, whereas we see some yields towards 3 months to 1 month to 3 month instrument can trade as low as 4%, whereas on the longer end, we can see instruments trading as high as 8-9%. So it's still a function of what investment horizon investors have and how they want to take position to take advantage of the market yield curve. So for the Treasury bills market, it's still attractive but dependent on what investors are tracking and what investment objectives are.
Well, thank you so much, Robert, for hanging in there with us and, of course, giving us your perspectives with regards to the bonds and treasury bills and how they'll be traded.